Everyone tells you the same thing. Don't trade the news, stay flat, and just wait for it to pass. And honestly, I get why they say that. Most people don't know how to interpret the data, so they're just gambling on a number. But here's the thing. If you actually understand what the market is reacting to, and more importantly, why, red folder events become some of the cleanest setups you will ever find. In this video, you'll better understand not only how to trade news events, but rather how to differentiate from a real opportunity from a meaningless print. First, let's talk about the two outcomes. When a high impact news event drops, NFP, CPI, rate decisions, whatever it is, there's really only two things that can happen. One, nothing. The data comes in right around expectations, the market barely even flinches, and everyone just moves on. Two, a big move. The number surprises to the upside or to the downside, and you'll get a fast directional push. And that's it, nothing or something. And that something is where the opportunity lives. Next, we'll talk about why markets move, and I honestly think everyone understands this point. However, they tend to stop at a very important level. So let's talk about it. So why do markets move on news in the first place? Well, it starts with expectations. Before any release, there's a consensus number. You'll see it on Forex Factory, Bloomberg, the economic calendar. That forecast figure, that number isn't random. It's the average estimate from some of the best economists and analysts on the planet. Think about your JP Morgans, your Goldman Sachs, your UBS, all of the smartest minds. They are collectively, it is their job to go ahead and try to predict what the numbers are going to be. Okay, and so that number is widely available, and the market has already priced that number in before the data even drops. So when the actual number comes out, markets don't react to the number itself. Instead, they react to the difference between what's expected and what actually happened. So expected 150,000 jobs and we got 200K, that's a beat. Expected 150 and we got 80, that's a miss. That delta, the gap between expectations and reality, is what drives the move. But here's where most people stop. And here's where you need to lean in, because this next part is what separates trading the news from gambling on the news. This is the framework that you must follow. So the move isn't just about the surprise. It's about how that new data point fits into the bigger picture that's already in play. Think of it like this. You know, in a video game, when you're looking at a character's stats, right? You got speed, you got power, defense, all of it, right? All sitting at certain levels. That's the current economy right now. It has a profile. Growth is at a certain level, inflation's at a certain level, employment, consumer spending, all of it. It's all at a certain level. Now, imagine a new data release is like equipping a new item. If your character speed stat is already low and you equip it with something that drops it even further, that changes everything. You become even slower. Think of that as a data miss on an already bad outlook. But if speed is already maxed out, that same item barely moves. That's exactly how news works. It's not the number alone and the miss and expectation. It's what the number does to the stats that are already there. So that's the framework you really need to remember. New data in the current context, not just simply higher or lower than expectations. All right, so how do you actually do this, and how do you actually apply it and trade it, right? So first, you need to know two things before any red folder event. First, what's the current state of the asset that you're trading? Is the dollar strong or weak right now? Is the macro backdrop supportive or deteriorating? What's the trend, right? Okay. Second, what's a beat or miss actually do to that picture? Would it reinforce what's already happening, or would it flip the narrative? If a strong number drops and the economy is already running hot, that's just fuel on the fire, right? Dollar strength, yields higher, risk off in equities, if it means rates stay higher for longer. But if a strong number drops and the market's already priced in strength, it might not do anything at all. So if you think about it that way, you're no longer predicting the number, which that's the job of someone else. You're just mapping out scenarios ahead of time. If X happens, then the implication is Y. And if Z happens, the implication is something else, right? In trading, you have to take a reactive approach, and part of your job is to be prepared for any possible scenario. Now, doing that work manually takes a lot of time. I completely understand that. You're pulling data from multiple sources. You're tracking strength and weakness across currencies, commodities, indices. It's a lot. Personally, I delegate that to the Edge Finder. It aggregates all of the macro data that affects an asset's strength or weakness and scores it. Bullish, bearish, or neutral, what the new data means when it drops. It updates it all in real time. The score either improves or it gets discounted. So instead of scrambling to interpret a number at 8:30 in the morning, I already know what the macro picture looks like. I just need to see, Did it make the data worse or better? And from there, I filter the strongest setups, the assets with the highest conviction scores, because those are the ones where the macro alignment is the cleanest. So let me give you a real life example of a trade that I'm actually in right now. So you do have the general scorecard here where it gives you the synopsis as to how each asset is doing. You have your very bullish readings and your very bearish readings. And this considers the technicals, the sentiment, economic growth, inflation, jobs market, everything that matters, everything that influence a price for the asset. So right here, you can see that New Zealand US dollar is actually getting a very bearish reading of -9. Now, I was thinking about how I can do this video, but I said, you know what? Most people would probably just go ahead and go to TradingView here and do like a market replay and show you how it works. I'm not going to do that. I'm going to be very vulnerable here and show you a live trade that I'm in right now. This is New Zealand US dollar short here. This could very well go against me, but in my channel, I'm going to give you the truth. This thing can work out or it cannot. I just want to show you how I personally use the tool. So going into the actual terminal here, let's go ahead and look at the actual New Zealand US dollar scorecard here. You can see that it's getting a very bearish reading of -9 for a multitude of reasons. The bearish signal, you have economic growth, jobs market, inflation data is actually working against this trade here. And again, this is just a matter of finding what works, strength versus weakness, pairing it together, and getting a good trade setup. You can see here that, during the whole duration of this war here, you can see that the score has been consistently bearish, right? So the way I use this tool, this is not a timing tool by any means. In fact, trading the Kiwi dollar during all of this, I was flat and I was desperately waiting for some kind of a pullback opportunity. You can see here, if I zoom out of this chart, you can see that we were basically in the middle of this two range here. I have a simple basic support and resistance here, and we are basically, up until today, we were essentially in the middle of that in no man's land. So I was basically under the impression that, okay, I want to trade this asset to the downside. You have the edge finder score showing it that it's very bearish, so I'm going to go ahead and wait for a meaningful pullback. My meaningful pullback, by my definition, was this level of resistance. You can see that we've held it nice for multiple times here. You also have the 200-day and the 50-day moving average, and so we got there, and so I'm going to go ahead and trade that, right? So I entered the market short here, and so my understanding here is that if the trend continues to the downside with the fundamentals in line in that direction, this will be a profitable trade. Again, I could have went ahead and showed you a previous example and cherry picked something that I knew would have worked, right? Just like a lot of these other YouTubers and influencers do, they just cherry pick their strategy and they call it a clean setup. I'm not going to do that. This is a real life trade that I'm in. You can reference this video back 2-3 weeks from now. If I'm completely wrong, so be it. But this is how I use the tool. It has been extremely effective. So this is just one of those real life examples. And if you want to see how I trade these setups in real time, make sure you're subscribed. I break down the macro, the data, the trade ideas the best way I possibly can. I trade for a living. I also work for A1 Trading, doing the market research for them. This is what I do. This is my business. This is my world. So with that, I'll see you in the next one. Have a blessed rest of your day, everyone, and trade safely. Bye-bye.